Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Tuesday, September 24th. Today, we got a lot of information regarding house pricing. The S&P Cash Schiller Home Price Index, it's still quite high, month over month 0%, but year over year 5.9. And as you can see, the house price index is still year over year with 4.5%, and month over month it's still increasing. And affordable houses prices, it's still an issue for inflation. But today's big data and the data that basically harmed a little bit the sentiment was the consumer confidence for September, which took a really big hit from 105. We were expecting a little bit of a decrease to 103, and we got 98. And the report shows that despite slower overall inflation and declines in some goods prices, the average 12-month inflation expectations increased to 5.2 in September. Really crazy numbers. I think that's one of the things that made the market to really pull back a lot. And when you see this consumer confidence going down, the markets are thinking, are we going to get support? And looks like they are pricing in again a 50 basis points interest rate cut on November with 58 probability. We came from the 25 to the 50 basis points again because the market is seeing that consumer confidence is slowing down, house prices is still going up, and they seek support. They are looking for more support on the economy, and that's why they are pricing in these 50 basis points. And if something is happening, it's a big push to the upside in a big bounce. And this bounce was initially due to consumer confidence going down, but then, as you can see, we went right there. It's a little bit more technical than it looks like because we are getting higher highs constantly since the other day. We are still pushing and pushing and pushing, and all this liquidity is not being driven, is not being hunted. And what we see, it's a choppy market that is now pushing higher to the upside, looking for liquidity in the other way, in the buy side liquidity. Let me just go briefly to my trades during the overnight. I saw this move down and I waited and waited and waited for the 5-minute setup that you can see here. I waited for this big push to the downside to get reclaimed. Okay, we have a fair value gap in here, and I took a little bit of scalp for that pivot on the first trade. For this liquidity, we got the inverse getting run through. We got the runaway gap, and then this beautiful entry of the 50% retracement on the fair value gap. That was a quick scalp for 1.50. I was too hesitant after this move down because, I mean, I told you that I was going to be quite conservative, so it's just a scalp for 12 points, okay? First trade, I saw it continue higher, and we got two things. The first thing that we got is this order block on the 15-minute chart, and then this inverse fair value gap with a liquidity from yesterday. So that's my main concern. It's, are we going to hunt that again? I try to continue with a new trade looking for this liquidity, and I got stopped out in this week. As you can see, the entry into the fair value gap, the first candle that tapped in there, I was quite nervous here, but I mean, I was just risking 11 points, the same that I got in the previous trade. So back at break even, and I tried it again. This was a trap. This was the turtle soup. This was another turtle soup. And then in here, I saw it. Okay, let's do it. I was thinking about this, and then it gave me another opportunity So I took it with a stop loss of 8 points, risk reward ratio 2.6 for this liquidity, and I finally got it. 22 points, and then we pulled back a lot. We dragged this minor sell side, and then we continue higher. This minor sell side being taken with an inverse and with a bullish fair value gap. Again, another setup for a push for the minor buy side. This was basically a textbook pattern of continuation for the shorts to get squeezed. Another 30 points, same setup. The stop below the gap, the tap into the fair value gap, the hand on liquidity, beautiful. And then I stopped being so greedy, and once I saw that this pre-market from yesterday got taken, I was basically just watching the market. And after that, look at this. What happened here, I don't know, but I was watching the 1 hour. This was the 1 hour candle, huge 1 hour candle. I took the quadrants and I noticed, okay, 20,078, it's my line on the sand. I don't want to trade anything below that. Let's see if it can go down and find some kind of support to really bounce and do the V-shaped reversal. And this is let's go to the 15 minute, because this zone from yesterday, it's on the 1 minute. It's on the 1 minute. This candle from yesterday gave me a good entry point and on liquidity. The same zone of yesterday, the same zone today. I was only concerned about this sell side for this week, but these two bottoms, I told you yesterday in my video, and I told you in my weekly recap, I think these two are protected. And once I saw this kind of move down here, notice how I have it marked here. Look at this, beautiful. It was on the 5. Look at this. This was certainly something I was watching. And once I saw the displacement to the upside, the order block, because we have basically low, high, lower low, higher high. So this was the order block that I was watching, and this was the perfect entry. It was during the inverse fair value gap, bullish fair value gap, order block, entry, stop at the low of the candle for 22 points. But I just wanted to, in this 1 hour, in this inverse fair value gap, I just wanted to tap the upper part. I was not confident. Look at this, the consequent encouragement of that 1 hour wick. Look at what happened. This was the level. Then we got this huge candle. So I'm going to be bullish in this move. Choppy, but bullish. And that's what I thought, what I saw. 63 points, and I could have just let it run to the upside, but I mean, I'm being conservative. I just want to take what the market wants to give me. And as I can see this market, the longer it holds up here, the longer it holds on the, let's see the narrative of the 15 minute. We have an inverse here. We took liquidity and we didn't displace to the downside. I have this liquidity up here at 251. And if we go to the NQ continuous chart, look at where are we. We are basically at this big zone of liquidity. This is the same zone that the NQ December chart is waiting for. I think we are going to see that level being taken. 251, but we have to really be patient. There were some nuances on the 15-minute chart. This was another order block. We are holding that, so that's gone. This 5 minutes is gone. This is gone. This is gone. we are trying to hold this bullish fair value gap on the 15-minute. We are trying to hold that. I would say that there are better prices down here. So I would expect a really trap for shorts manipulation into the liquidity. I don't want this to go directly to 251 because then most probably they will just reverse it. If you want to see higher pricing, if you want to see the ES take this liquidity into all-time highs up here, this is all-time highs for ES. I think we are going to see that move into the afternoon. So be patient, wait for the manipulation move, wait for the SMT in both ES and NQ, and then take the opportunity. This is the 15 that we are holding right now. This is the inverse that we are also holding. So it looks pretty good, but I would wait for some kind of manipulation on liquidity to really look for the hand on buy side. And today is a good day. It's quite difficult to really see this coming, this kind of push after the bad consumer confidence report. But price action is king, and you have to really have these levels marked out. You have to be prepared for these kind of moves and follow your price action. Don't be so naive and so let that ego be apart and just watch the price action, make your setups, make your strategy, and just be like that. If you are wrong, take that. If you are on the right side, just be technical, because sometimes be married to a bias, it's really bad. It's really bad for your trading because you are not flexible, you are not adapting to what the market is showing you. What the market is telling you with this move is that it wants to go higher. Don't be so stubborn that you don't take this kind of opportunity. The banks are quite in the red. Small caps are barely holding, but Nvidia is flying. So take that opportunity. Take that. The ES, it's so near to all-time highs that I think is going to hunt that. It's going to push the Nasdaq towards this 251 buy side, and we will have more opportunities. And if not, you have been patient, disciplined, and there are a lot of more days in the week and in the month. So I think we had a lot of opportunities today in both brands, a lot of manipulation. The rollover, it's already done, and we are seeing some technicals holding. So despite the fact that fundamentals are bad, I think the market is seeking upside, it's seeking higher pricing, and it's seeking support from the Fed in these 50 basis points that we are pricing in. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember, the trading day is not over yet. I think we can see continuation. We are consolidating up here, and it looks pretty bullish towards ES all-time highs and NQ 251. So if you want to trade the power hour, welcome. But be disciplined, be patient, and manage your risk. Stay safe, everyone, and see you tomorrow.